And joining us on the trading floor, we have Ivan Colhoun, head of Australian economics at ANZ Banking in Sydney. Good to have you in the program. Ivan, first off, your reaction to these inflation numbers, which is unchanged from the previous quarter and pretty much bang in line with what economists were expecting.
Yeah, look, it was very as expected this time. I guess people were perhaps hoping that the core number would be a little bit lower, but it came in at the expectation of forecast. So still a very good number, 0.5, 0.6 for the two different core measures. If you annualise that, you're right in the middle of the RBA's band. When you take into account last quarters, you're at the lower end of the band. So it does confirm that the inflation picture in Australia is really very good at this point in time. It confirms that the RBA, when it's changed its inflation view a couple of months ago, was right to make that call.
Well, you know, Ivan, of course, CPI inflation being one of the main factors that go into an RBA rate decision. So I guess the call is on. What do you think the RBA is going to do? Cut interest rates or stay on hold?
Look, I think it's quite a finely balanced decision this time. We've had two cuts in a row. With the inflation numbers, it certainly gives them the room to cut if they feel they need to. They still have this big mining investment boom to contend with. I think we will get another interest rate cut. It's just, will it be next month? I'm not as convinced. I think it's a bit more of a line ball decision than it has been. But generally speaking, when we look at the Australian economy in overall, it's doing pretty well. It's doing very well compared to most other economies in the world. But employment isn't growing very strongly, and I think that's now the RBA's task. They need to have employment growing modestly to stop unemployment from rising. This inflation number, again, gives them the opportunity to do that. So I think we'll see a little bit more off interest rates in the next few months, but will it definitely be February? The market's very convinced about that. I'm not quite as convinced about that.
Okay, but what about for the year? I mean, the market seems to be also pricing in about 100 basis point chop off borrowing costs. Is that your expectation as well for this year?
Look, that one has been there for a while. It's probably come back a little bit with the US data being stronger recently, also with European concerns just easing slightly. The reason we've had such big discounts, I think, has been because of concerns that Europe will drag the whole world into a terrible situation. That seems to be easing, so I think we expect the markets to be pricing less in terms of rate cuts for Australia unless European concerns really pick up again. So I don't think, if you just looked at Australia and how things are going, you can get some slightly lower interest rates, but you really need that global situation to get the sort of rate cuts that are still being priced by the market.
All right. Ivan, thank you so much for sharing your time today. Ivan Colhoun, head of Australian economics at ANZ Banking.